Somehow I think the market knew that today there's going to be a launch in Malaysia. Her Excellency, Judith St. George, members of the Royal Canadian Mint, Mr. Joycelyn, Mr. James Gunn, Tomei Group VIPs, Tan Tri Eng, Dato Eng, members of the press, VIPs, Tan Tri, Dato, Datin, ladies and gentlemen. My name is Mario, and the first thing I want to say, I want to congratulate the entire Tomei Group for a wonderful historic launch of the Gold Maple Leaf. Let's give them a big hand. Thank you so much for inviting me to share a little bit of insights on what's going around in the world, and particularly on what's happening in the bullion market. What's happening to gold, what's happening to silver, and how you can really take advantage of the situation today as an exclusive guest on today's launch in Tomei. So I'm just going to roughly brief what I will be covering so you get an idea of what's going to happen the next half an hour or so. I'm going to share a little bit about the world economy. All right, I think it's important for us to understand what's going around in the world. That's point number one. I will then go slightly deeper into three economies. So I'm going to talk about the US. I think it's important for us to understand what's happening in the world's largest economy. I'm then going to talk about China. Can't afford to ignore China. Then I'm going to cover a little bit about Europe. Okay? Once I do that, we will go into gold and silver, which is, I'm sure, a topic that everybody wants to understand. All right? So let's just kick it off immediately. So the first slide I want to show you is by the IMF. So the IMF stands for the International Monetary Fund. Now, they and the World Bank are probably two of the top institutions that we can take small clues from. You know, as someone who analyzes the market, we have to train ourselves what to listen and what not to listen. Because sometimes if we listen any old how, then people may just incept your mind and put messages in there which should not be there. So I think it's for the IMF and the World Bank, it's very interesting that we should be taking cues from there. And this is the first thing I want to show you. The end of last year, so as a snapshot of what happened last year, right? Global growth was at 3.3%. How good is that? How bad is that? Well, let's compare with what they are going to forecast for 2015. And then we will know whether are we on an uptrend or are we on a downtrend. They mentioned two things. There are setbacks in advanced economies. So advanced economies in the world today, probably four places, all right? When you see the word advanced economies, it's probably countries like the US, Europe, UK, Japan. These are the four advanced economies. Everything else falls under developing. So if you see countries like Brazil, Russia, India, China, Turkey, Indonesia, these are the growth spots or the developing nations, so to speak. Less optimistic about emerging markets. So the countries I mentioned to you, Brazil, Russia, South Africa, they're not really doing very well, all right, for some reasons that we can discuss in a while. Snapshot of GDP growth in the entire world. Now, we can just focus probably from 2009 onwards, all right? It makes more sense to us. 2009, as you can see, it is probably non-existent. And I think all of us know why. There was a global financial crisis, imploded in the US, affected all areas of the world. So from there onwards, right, the year thereafter, yes, GDP did grow 5%, but over the years, it's kind of stagnated at about 3%. Okay? So this is the 2015 forecast. Although it says 3.3%, they're kind of like revising the rates to between 3.3 to 3.5. Now, this is a downward revision. You can see from the slides, it actually says 3.8%, right? Revised downwards to 3.3 to about 3.5. This is about the same rate at about 2014. So no real good news, no real bad news. Okay? They are experts at massaging the message. But in a sense, global growth will be fairly stagnant last year and this year. All right? Three main points I want to share from their lengthy discussion. Number one, cheaper oil will support growth. I think most people know that oil prices have plunged literally over the last 6 to 7 months. Okay? Slower growth in China, that's one of the key reasons why they have revised their numbers downwards. China is considered the growth engine of the world, right? We'll get into China in a while if you guys are keen to understand about China. And when you see this big word, right, accommodative policy, what does this word mean? It basically means low interest rates, right? When they use these big words, it basically means that we are in a low interest rate environment. So interest rates got to remain low so that people can borrow money, so that companies can borrow money to stimulate the economy. Does that make sense? Yep. So I want to share with you, this is basically where I got the slides from, okay? Global growth revised down despite cheaper oil. The only bright spot so far is the US. Now, US is a little bit complicated, but I do hope to share some insights with you. So this is taken smack off the IMF website, okay? So let's talk a little bit about the first point. There were 3 points that the IMF mentioned. First point, cheaper oil will support growth. Now, oil prices have literally plunged over the last 6, 7 months. You know, I'll share with you an interesting story. I'm based in Singapore. So a few days ago, right, I went to pump petrol. And I asked the petrol station, so how much lower are you guys charging now? Right? It was an instinctive question because I know oil prices have dropped, right? I said, no, sir, we are raising prices. I said, why? I said, globally, prices have plummeted about 60%. About 6 months ago, it was at about, say, $95, all right, per barrel. Now it's about $46, $47. They say, oh, sir, last year it plunged, but this year it's going up. I didn't want to argue with that because, for a fact, it is actually going down. But it's so ridiculous that as prices are dropping, oil prices in some companies are going up. I'm speaking about Singapore. I don't know about the rest of the world. So although cheaper oil will support growth, that's a plus point, okay? It will offset negative factors that affect growth. So what are some of the negative factors? Number one, investment weakness. What does that mean? There's not a lot of capital flows into investment projects, right? Why? Because of the depressed sentiments of the markets. If you look around, Japan isn't doing well, Europe isn't doing well, China has the lowest GDP in 24 years, so there isn't a lot of good news to share around. The only bright spark is in the US, okay? Slowing trade. I was reading news about the UK. Even UK's trade is slowing down now. Members of the MPC, which is the people who they devise monetary policies in the UK, a couple of them, 2 of them in fact, they mentioned that I think it's about time that we may need to do more. Now when they use the words do more, it basically means they're either going to pump in more cash or drop interest rates lower. Okay? So I hope you guys, you know when you see this word just now, summarize again. When you see the word accommodative policy, it means they need to do more. Doing more meaning drop interest rates, pump in more cash into the system. Okay? Falling commodity prices. Can't be good. So falling commodity prices, in particular three commodities, right? If you look at iron, you look at coal, and you look at copper. Now these 3 things form the basic building blocks of many, many industries, okay? So China isn't producing as much, and they're not consuming as much as well, which simply means one sentence. I'm quite good for summary, so I summarize for you. It simply means that world demand is slowing, okay? Prices are dropping, simply means people are not buying. And not buying because demand is low, all right? Snapshot from Bloomberg. Okay, picture paints 1,000 words. So this is a picture of WTI crude. Now this is one of the 2 biggest crude oils in the world. So you can see for the last 1 year, prices have dropped, right? It basically has plunged like that. Okay, as you can see from your chart. Many reasons why it has plunged. Many reasons. I share with you a few reasons that I'm reading. Okay? One of the key things, obviously, is supply and demand. There is a lot more supply than there is demand. Basic economics, when supply exceeds demand, prices drop. Okay? In the US, right, particularly in two areas, the South, in Texas, and the North, in North Dakota, they have stumbled upon huge areas of oil. In particular areas called the Bakken Formation. This is in North Dakota, in the north of the US. So because they stumble upon oil and shale, there's a lot more supply now that's coming out into the market. A deeper reason I want to share with you is this word called market share. Now, if you look at OPEC, now OPEC is a group that kind of like controls oil prices, okay? One of the boldest statements that has come out of OPEC says, right, even though prices are dropping, we will not stop producing. When I read that, I didn't understand. So I have to read further, or I have to appear intelligent, right? So I read further because I didn't understand. And the more I read, the more I realized, friends, it is about these two words called market share. So as they are pumping and pumping and pumping oil, and prices are dropping, it will force out some of the producers who cannot hold those low prices. It will force them out of business. That's the main reason, market share. So prices will remain about these prices. Saudi Arabia is okay. $49, $46 a barrel. No problem for them. So that's one of the, may I use the word, political reasons, all right, to gain market share, to force out the other producers from the market so that their market share grows, okay? So this is a picture of WTI crude. Now, I'm going to show you another graph. You see the word Brent crude, all right? What is the difference? Some of you may have seen in the newspapers or when you're doing your reading, there are basically two kinds of crude oil in the world. WTI is crude oil used more in North America, Canada, those areas, all right? If you see Brent crude, it is used mostly in places in Europe, now more so in Southeast Asia where we are based in, right? So they follow Brent a lot more. There's no better, no worse, it's just the way it is, okay? The differences between WTI and Brent is about $10 US. So if you see WTI at about $46 per barrel, right, Brent is about $56 per barrel, okay? The key statement I want to share with you is that over the last 6 to 7 months, both of them have plunged quite significantly, okay? But in Singapore, oil prices still going up. So, second point, slower growth in China. Why is China important for you and I to look at? Well, because it is the growth engine, okay? We are talking about the second largest economy in the world. US is still at number 1. Their annual GDP is about 15 trillion. China is coming up. Annual GDP today stands at about 8.5 trillion US dollars, okay? So there's definitely more growth in China. Now, 3 key points, so that we pick up some key points. Although China grew at 7.4% last year. Now, is this number good or bad? You see, for us to even find out is it good or bad, have to do a bit of comparison, right? 7.4%, if you compare with what the IMF said about world global growth, 3.3%. This is more than double world growth. So from that perspective, is it good? Oh, it's amazing, man. It's amazing. But it is their lowest growth in the last 24 years. China has experienced literally 3 decades, 30 years of double-digit growth. Pretty amazing, but slowing down. In fact, in Beijing, just I think early this month in March, first week, right, when they gathered, the government officials, they're officially saying that China's growth should be in the region of about 6.8 to 7% by the end of 2015, which means lower than 2014, all right? IMF welcomes slower growth. Why would IMF welcome slower growth? The main reason, friends, is that China is in a position to change their economy. Okay, let me explain what that means. For the longest time, China has always been built on 2 things. Number 1, cheap labor, and number 2, an export-oriented country. So export-oriented simply means they produce, they manufacture a lot of stuff, and they export throughout the world. The problem with that model is that if the other countries that you export to, if they're not buying, you get affected. True? So they are in a state of rebalancing, moving towards something that has always been export-driven into something that is more consumption-driven. Meaning to say, they want to increase the living standards of the people in China so that they will consume more. Basically, from exporting more to importing more. Okay? When you do that, you become more self-sufficient as opposed to being overly reliant on export economies. Okay? Last point, when the IMF says the accommodative policy must stay. So just now we learned already, right? When you see this word accommodative policy, it basically means you shouldn't be raising interest rates. Let's keep interest rates low, which is what you're seeing now. Many of the developed nations, they are at very low interest rates. Switzerland, Europe, they are all at negative interest rate. Do you know what is the meaning of negative interest rates? It means if you put money in the bank, you put $100 in, when you take out, you get back $99. So they will tax you for putting your money in the bank. That's called negative interest rates. This is the scenario we are in today. Okay? What is the meaning of deflation? You see that point there? Cheaper oil increases the risk of deflation. Now, I think most people will understand the word inflation, right? So inflation simply means prices increase. Too much money, chasing too few goods, prices of goods increase. Deflation, the other way around. The prices of goods are falling. Why is that a bad thing? I'll give you two reasons. Deflation is bad for two reasons. Right? Number one, it will drop demand. Why? You see, whenever you are in a deflationary environment, right, the prerogative of the people is that I'll wait further for prices to drop more. Does that make sense? If prices are dropping, what for buy? You know, we will wait for things to drop even lower before we buy. So deflation has that aspect, number one. And if you follow through that cycle of deflation, what is going to happen is that unemployment may increase. Because if prices are dropping and people are not buying, then the manufacturers all will suffer. If sales, in a sense, is not robust, if it's not moving, then what is going to happen is that unemployment starts increasing. Classic case, Japan. Japan has been fighting deflation for 20 years. This is the scenario today. Okay? So no central bank wants to have deflation. No one. Most central banks, their mandate is to maintain inflation at about 2%. Okay, remember this number, 2%. The problem with the 2% is that there is no economy at 2% inflation. The highest in China today is only 1.4. So IMF cuts global growth outlook, calls for accommodative policies, meaning to tell the central banks do more. All right, we are still in a low interest rate environment. I just share one slide about the World Bank. Okay, headline is good enough. Reduces global growth forecast for 2015-2016. So the IMF and the World Bank are two of the institutions that most bankers, most institutions will look at. So if you look at this, it gives you a snapshot of what they think about the global economy. IMF, World Bank, both of them has cut global growth. That's the first point. Second point is that when you see 0.5% means they have cut their forecast for 2015. Okay? It used to be at 3.8%. Now they are saying 2015 will end up at 3.3%. So both have cut. There's going to be deflationary risks within the markets. They have to watch that the deflationary risks do not spiral into a recession. Okay? Japan hit recession third quarter of last year, precisely because of these reasons. Cheap oil will support growth. That's the good thing, provided there's demand. We always have to understand, friends, the dynamics of the economy. You can have something so cheap, but if no one is buying, what's the use? The main key thing is to stimulate demand. Cheap doesn't really solve the problem. There's optimism in the US economy. Yesterday, I don't know how many of you stayed up to watch the news at 2 a.m. That's when the Federal Reserve Chair Lady Janet Yellen, she was giving his speech. And there are really some bright sparks in the US. Okay, without a doubt, among all the major economies, if you forget everything I say, US is improving relative to the rest of the other economies. Okay? Growth in the Eurozone and Japan remains weak. So you have US, that's not bad. You have UK, Europe, Japan, not so good. Okay? Let's go just a little bit more. So that's a snapshot of the world. I'll cover 3 countries, right? Some of you who want a bit more information on United States, Europe, China. Then we dive into gold and silver. So United States, what can we say about the world's largest economy? Well, it's a very complex economy. I don't pretend to know it all. Okay? It's complex because, number one, it's the world's largest economy, but it also has the world's greatest deficit. Did you know that? They are deeply in debt. Deeply in debt. They owe like 100% of GDP. They owe 15 trillion to the entire world. Now, if you look at news, and they are at the very top, right, in terms of how much they owe. Second being UK, third being India. If you just compare US and UK, or rather, okay, if you compare the difference between UK and India, it's very near. But you compare the difference between US and UK, it's like 6 times. Ridiculous, right? So the US owes a lot of money to the world. But the US dollar is still strengthening. How amazing is that? Part of the reason is if you have a US dollar bill, you turn behind, there's forwards there. Anybody knows what's the forwards? It says, "In God we trust." So they are a very faithful country, And for the most part, to be fair to the US, they have never defaulted on their debt because they can always print more money to pay the interest of the debt, right? And it recycles again and again. That's why their debt is growing bigger and bigger. But let's, in a short summary, recent indicators. Recent means as recent as last 2-3 months, okay? There really are some bright sparks in the US. Granted, they have been down the last 6 years, right? The global financial crisis has exploded, 2008, 2009. They are finally coming out of there. At the peak, unemployment was about 10%. Today, it's about 5.5%. So not bad. More people are getting employed. They remain on path to hike rates. Hike rates means to raise interest rates. This is going to be the biggest clue that the US feels, hey, we are doing all right. Okay? The market expects the rate hike in end of June. So Q2 means end of June. Expect doesn't mean will happen, right? Chances are by end of Q2 will be a welcome surprise. I personally think it'll be by September. That means by the end of the third quarter of 2015. So 4 areas, for those of you who want to find out, hey Mario, so how would we know that the US is improving? What should I look at? Look at 4 things. It's on the screen. Okay, number 1. Non-farm payrolls. What is the meaning of non-farm payrolls? This is the single biggest indicator that traders and investors look at for the US. Okay? This happens on the first Friday of every month at about 8:30 p.m. our time, the GMT plus 8 time zone. All right? This basically means how many people have been employed in the US outside of the farming industry. Hence the term non-farm payrolls. Okay? Very closely watched figure. This basically tells you how many people have been employed in the last month in the US. Next, we look at the unemployment rate. By right, if the first one goes up, the second one should come down. Correct? If more people are employed, then of course lesser people should be unemployed. The GDP. How much production of goods and services is within the country? If it's improving, this number should be going up. CPI, the Consumer Price Index, is basically what happens in inflation. All central banks today want to see their inflation increasing. Okay, that's the summary. The problem is it is not increasing. So they need to engineer that the inflation rate goes up. One way is to flood the market with money. Because remember my statement, too much money chasing too few goods. So when there's a lot of money, it creates a lot of inflationary pressures, right? Picture of the Bloomberg terminal, snapshot. What does this mean? Okay, look, focus on this statement. The US has had the longest run of above 200,000 employments increase since 1994. This sentence simply means over the last 21 years, all right, it has had the longest run of above 200,000 employments. Does that make sense? Last month, they employed 295,000 people. So over the last 6 months, easily, they have clocked above 200,000, which is a good sign. Okay, markets think, not bad, doing well. It has the unemployment rate all the way here. It is at a 6.5-year low. 5.5%, very healthy, okay? It used to be at 10%, all right, during the global financial crisis. 10%, can you imagine that? You meet 10 people in US, one of them has no job. Very bad in the US. Getting better, 5.5% last month. GDP, a very good indicator. All you want to see is that GDP goes up. GDP goes down means recession. GDP goes up means good. So what is happening in the US is that whether you look at it from quarter to quarter, QOQ means from quarter on quarter, every 3 months. YOY means year on year. Basically, they're comparing the entire year, 2014 to 2015. Okay? Quarter means they are comparing the last 3 months to these 3 months. Also not bad. Hovering above 2.2%. Okay? So this is GDP year on year. Consumer price index. This is the only thing that they are focusing on now. If you notice it's negative, it's minus 0.1. They want to see it in the positive zone. Remember, the mandate of most central banks worldwide, they want to see inflation at about 2%. I shared with you, remember this figure, 2%. The only challenge is there's no economy at 2%. I mean, the advanced economies, right? But getting there, China is ahead, all right? Next to catch up will be the US in terms of the inflation figures. So that's a summary. They remain on path to hike their rates in 2015. Probably the only one amongst the major economies. The rest of the three, which is UK, Europe, Japan, nowhere near increasing interest rates. This is the first guy out of the blocks, okay, the US. So this is Reuters, another free site, friends. Go to Reuters.com. You can pluck out all this information. Most of them will say the same thing, okay? These are the reasons why the markets expect the rate hike to be by Q2, Q3. Unemployment low, employment figures above 200,000 for the last 6 months, right? Just two sentences for the summary. And a lot of these are just to show you some of the reasons why the world basically are expecting US to improve and raise rates for this year. Okay? This is a picture to just show you 2 lines. I hope you can see. If not, I'll trace it out for you. The green line, I also can't see the figures. What is this? Okay, if it's 1-to-1, that means the green line represents the price of the USD versus JPY. How much the US dollar is strengthening against the Japanese yen. So if it's going up, it means the US dollar is strengthening over the Japanese yen, right? Which simply means US dollar is getting strong. The other line, this one, this guy represents the dollar index. Now the dollar index is basically how the US dollar is performing over a basket of 6 currencies. So in general, what you see is that the US dollar is strengthening over most, if not all, of the major currencies and the major economies. This is the proof for you. A little bit about Europe. They started QE just this month. So QE stands for quantitative easing. It is a fancy word for printing money. All right? Why do you need to print money? Because you have already lowered interest rates so low until it's 0 and demand is still not picking up. So the only way to engineer a comeback is to print more money, a lot of money supply in the economy, hoping that the I won't say free money, hoping that the cheap money gets into the businesses and lifts up the economy. The problem with QE, friends, is that cheap money will find its way out of the country. Okay? Generally, this is my analysis, whenever the major economies prints money, whether it's Europe, US, UK, Japan, it will find its way into the Asian economies, like where we are, Singapore, Malaysia, Thailand, Indonesia. Why? Because these countries, our Asian economies, generally have a higher interest rate than the advanced economies, right? So just understand that when the major economies are printing money, the failure of that policy is that the money finds its way out of the country into the stock market, into the real estate market of the Asian nations. Has always been the case. But they still continue printing. You know why? Because doing something is better than not doing. Because people in power must show that they are doing something. What? If not, when elections come, problem. Okay? General statement across the world. So this is what's happening in Europe. Started quantitative easing, they will buy bonds. All right, when they buy bonds, it basically infuses cash into the system. They are buying to the tune of 60 billion euros per month. The entire package is 1.1 trillion. So it will last all the way to September 2016. By the end of September 2016, they would have infused a grand total of 1.1 trillion euros into the system. This is the Bloomberg site where I plucked it from. He and I share the same name, just for information. This is Mario Draghi, not related, unfortunately. All right, President of the European Central Bank. This is to show that Europe is basically expanding its balance sheet. All right, why? Because they are buying 60 billion every month. What do they hope this money does? Same story, friends. They hope that it will boost inflation and economic growth. Because there's no other way. What other way is there? You've already dropped interest rates to zero. There's nothing else you can do. Print more. Hopefully it supports the economy. Okay? So this is the path that they are on now. They hope that inflation will be 2% in 2018. That's 3 years' time. Now inflation is almost non-existent in Europe. This is to share with you. You see, their inflation is below zero now. They hope that it will be at 2%. So they have a long way to go, which is the reason why the euro has collapsed over the last few months. Okay, this is GDP, a graph of GDP where they expect GDP to be. Is there a possibility of Grexit? What is Grexit? The exit of Greece. Share with you an interesting comment. So in my team, I have a team of analysts that basically churns out reports and studies the data. One of my analysts came to me and said, Mario, check it out, man. On Bloomberg Terminal, they are preparing for the trading of the drachma. You know what's the drachma? The drachma used to be Greece currency, okay, before they dropped it and adopted the euro. So Bloomberg itself is preparing for the trading of the drachma again. Possibility of Grexit? Who knows? Could happen. Greece has been on a lifeline for years. All right? Can't pay back. So this is all political stuff that we won't get into. I just want to share with you that there's a possibility that Greece may exit the euro. The next question in your mind, some of you may ask me, should I buy or sell the euro when Greece exits? I don't know. You know why? Because both sides make sense. Some people would sell thinking, hey, jialat, bad case. Now a member of the Eurozone has left. Some people may say, amazing. Now you cut off the cancer, finally you can grow. So really, I don't know. Okay? We can only flow with the market. If the euro goes up, then you click buy. If the euro goes down, then you click sell. So euro has crashed, quite literally, all right, over the last couple of years. Last one. And then we go to gold. All right? Are you guys still with me? Okay, fantastic. Let's talk about China. Why is China important? Growth engine. After US, largest economy in the world, then you have China. Okay? They are easing. Easing means same thing. They are cutting interest rates. They are pumping money. They're doing the same thing. Why? There's no demand. 2015 GDP, 7%. This is lower than 2014. 2014 came in at 7.4%. The government is saying we're now lowering this year's targets to 7. So it's getting lower and lower. Why? Rebalancing. Okay? Not so much interested to export to the entire world. I now want to change my model. I want my people to consume more. All right? So a few things. Number one, inflation. If they don't see inflation picking up, they will probably do more. So for China, watching the inflation figures is important. Last month, the figure came in at 1.4 to 1.5%. Not bad. Not bad. It's not at 2%, which is what they want, but it is better than January. February was about 1.4 to 1.5. How do you compare? You look at January. January was 0.9%. So February was 1.4. There's an increase in inflation. Something good is happening in China. Okay? This is what the government says. If inflation figures are falling, then there's a high chance they will pump in more cash again. All right? Inflation key to China easing monetary policy. So this is a clue for you. Meaning to say, would there be more stimulus in the economy? The answer would be yes, if inflation figures drop. All right? For some of our analysts or investment advisors out there, look out for inflation figures. There you go. On Reuters, China is likely to ease again if inflation falls. Right? Same thing. Okay, so this is their mandate now. GDP will be at 7% this year, right? This was mentioned during their plenary discussion, so to speak, meaning to say when the government gets together, they are looking at about 7% growth rate, okay? I'm repeating a few slides so that it gets into your mind. Now, this is their target. They are aiming at about 7%. So as I mentioned, it will be the lowest growth in the last 20 to 30 years, but it is necessary for China to literally step up on the world stage. One of the key things that China needs to do today is to ensure that its renminbi, which is the currency, it needs to be internationally freely floated. Now, one news I want to share with you, because I track the currency markets quite a fair bit. As of 2013, okay, for the first time in history, China's renminbi broke into the world's top 10 most traded currencies. Number one is still the US. You want to buy oil, you buy gold on the world stage, it is all priced in US dollars. Okay? China broke into the world's top 10 for the first time 2 years ago. Okay? They are on this path now to ensure that the renminbi is more used in international trade. Okay? Key statement to find out, because they need the renminbi to spread its tentacles everywhere around the world. All right? Before, what's the purpose for that? So that it can become a safe haven currency. All right? So that when there's turmoil in the world, people would rush into the renminbi. That's what they aim. Okay? Today, when there's turmoil in the world, money rushes to where? US dollar and Japanese yen. And now back to the Swiss franc. Okay? So, this is China. A more sustainable growth is needed. Slower. Why? To rebalance back into consumption-driven. That's why you see a lot of, the luxury goods is doing very well in China. Women's beauty products is doing well in China. Okay? Because people are spending. All right? They need them to spend. What about this word called structural reforms? A big word. When you see the word structural reforms, essentially China needs to do three things. Number one, reforming investment means what? China was the world's biggest drawer of FDI last year. Okay? Meaning to say, Which country received the most amount of foreign direct investment? China. In 2014, they drew 119 billion US dollars into their country last year. Number one in the world. Okay? What they said is that there are still some restrictions that don't allow money to come in. So for some industries, they will lift off those barriers so that more money can come in. Amazing, huh? Number two, capital market reforms means what? What I just talked about, the renminbi, the Chinese yuan. They must ensure that it is used more in international trade. Okay? That's why you see Xi Jinping, he's going around shaking hands with all the world leaders to seal all these contracts. All right? It's for a reason, friends, to ensure that renminbi is more freely used. They have to structure the SOE, the state-owned enterprise. Basically means one word. They want to stamp out corruption. There's a lot of corruption that happens in the 150,000 companies, all right, in the state-owned enterprises in China. Okay. This is basically how the Chinese yuan, CNH basically means offshore renminbi, right? Because the renminbi is not freely traded in the world yet. I'm trying to show you that the renminbi has slightly weakened because the US has strengthened. Let's talk about gold and silver. It's important for me to cover the major economies before I cover gold so that you have a full understanding of global economy. Why is that even important? To appear intelligent? No. All right? The key thing is for you to make money. When you understand where the world is going, it's not difficult to translate that knowledge into action, all right, and take certain decisions for you to increase your investment portfolio. Okay? Let's talk about gold. Why do people even buy gold? 4 main reasons. Till today, it's considered a safe haven asset. What is safe haven? Meaning when the world is in turmoil, when you don't know what to do, when Russia invades Ukraine, what's going to happen? When the world is in turmoil, they move into safe haven assets. US dollar, Japanese yen, gold. Okay? That's one of the reasons. Number 2, it's international cash value. Bring gold anywhere. There is a market that trades it. There is no country in the world that will ever say, I don't take your gold. Okay? You can be traded anywhere. Scarcity. Some interesting facts, right? Scarcity means what? It means there's limited supplies. I'm sure you've heard of the very famous colloquial, you know, all the gold ever mined in history can fit into 3.5 Olympic-sized swimming pools. All the gold ever mined. An Olympic-sized swimming pool is 50 by 25 by 2 meters. Can you imagine that? Since the dawn of time, only 3.5 pools. So there's a limited supply. There's about 165,000 metric tons of gold available today. Okay? It is dwindling. All right? Supply is dwindling. And what did I share with you just now? When demand exceeds supply, prices will start to go up. Okay? Timeless as in what? Whether you talk to someone in 1950 or whether you talk to someone in 2015, they will tell you this color is gold. Correct not? Is it green? No, right? Everyone knows it's gold. An ounce of gold, there's many ounces behind you by the way, can be drawn into a wire 60 miles long. Oh, it's quite amazing, huh? There is more steel created per hour than there has been gold dug up throughout history. Again, this sentence means there's a limited supply of gold around the world. The most expensive gold coin in the world, 1933 Double Eagle. It was sold for $7.59 million. Wow. Maybe the buyer is in this room. This is the Double Eagle, just to let you know what it looks like. Okay? What drives gold? You need to understand what are some of the reasons that influences the price of gold. Inflation. When there's high inflation, gold tends to go up. Interest rates, stock markets. Stock markets means what? When people are trading. You can be trading gold a lot in the stock markets around the world. Okay? So it's a lot of speculative activity. Hedge funds, all right, they trade a lot of gold. I'll show you something about hedge funds in a while. Geopolitics means what? When this country attacks that country, when you got problems, when countries don't talk to each other, gold tends to shoot up. Okay? The US dollar, sometimes when the US dollar strengthens, the price of gold drops. Now, how should you interpret that? Some people say, oh, gold will drop further. Some people say it's a good buying opportunity. I'll share with you what I think, all right, once we come to a close. Asian demand. In the whole of Asia, India is the biggest buyer of gold today, all right, followed by China. Okay, the third is the United States, but that's not part of Asia. This is an interesting report. You can go and check out this report. It's free, okay? On the website, it's called wgc.org, which is the World Gold Council report. They did a report on the full year for 2014. Let me highlight some key points, summary of what they talk about. So just to tune yourself, what is these two circles? The outside circle represents where was the demand of gold in 2013. The inner circle represents the demand of gold in 2014. Okay? All else being equal, the interesting thing about this slide is that central banks and investment means by a lot of hedge funds and all that, these two increase their holdings of gold in 2014 compared to 2013. Is that good or bad news? Well, that depends. Are you a buyer? If you are, then the question is, if the central banks are buying gold, what should you be doing? Okay, interesting, huh? This is basically the last quarter of 2014, all right? So it tells you that most of the places, jewelry, technology, investment, all right? Central bank purchases, you can see, is going up, okay? They are measuring from quarter to quarter, from 85 to 119. And then this is the 5-year average. Essentially, central banks have been going up. Okay? Net jewelry demand over the last few years has also shot up. Technology demand, all right? That means for industries that gold is being used, fairly significant, all right, over the last couple of years. Investments means what? Again, as I mentioned, the institutions who are buying up gold, okay? Is it a good time to buy? If you look at world prices today, it's about 1150, okay? There's a lot of theories surrounding why has gold dropped. One of the main reasons, so that it imprints in your mind, is that the US dollar is going up, okay? The US dollar and gold is fairly inversely proportionate. But it comes to a point that many industries, friends, are used in the gold ecosystem. Crash below a certain price, all the industries become unprofitable. We are at that stage today, at about 1,001. Okay? That's why I say it's a very monumental event when you see gold prices at about 1,001. I'll show it to you in a while. Central bank purchases have shot up from 2014 compared to 2013. Why are they buying gold? It can be a variety of reasons. We don't even need to get into there. The summary is that central banks, and central banks control world economies, they are stocking up on gold. Okay? Here is the key slide from Bloomberg. And this is a statement by the World Gold Council. All right? Russia has by far the greatest appetite for gold. Now, it's good news if Russia is stocking up on gold, man. Okay? They bought a total of 173 tons. I have no idea how much gold is that, but it sounds like a lot. Okay? Russia has stocked up on gold. Basically, this graph is to tell you about gold supply and how the supplies are literally dropping, okay, over the last few years. What is this? Okay, recycled gold. When it comes to recycled gold, I just showed this. This is something I took from the World Gold Council. But essentially, recycled gold remains about the same for the last 2 to 3 years. So nothing much we can infer from this slide. Coin demand, all right? What about bars and coin demands? It is slightly dropping, okay, but it represents different areas. It is going up in places like India and China. That's why in Asia today, India and China are considered the biggest buyers. Why? simply because prices are low. Let me summarize. Who are the people who say gold prices will drop, and who are the people who say gold prices will go up? And then I bring it to a close and give you some of my thoughts, okay? The bears means people who think that gold prices will continue to fall. Bears means falling prices. Number one, the strong US dollar. Because the strength of the US dollar, gold should drop. Okay, this is what they say. Number two, because of the global economic slowdown. Because there is low demand everywhere in the world, people don't have a lot of appetite to purchase gold. Number three, because we are in a low inflation environment. Now that's true. Okay, because gold tends to rise when there's high inflation. Many of you have heard the term, okay, gold is a good hedge against inflation. Meaning when there's high inflation, gold prices should go up. These people believe that gold will fall. Okay, this is the price. What is this? What's the number there? Okay, this is to show basically the price of the US dollar, right? This is the dollar index at 98. So this is on CNBC. I don't mind showing it to you. Stay clear, the gold sell-off could get uglier. I think this was reported in either February or March. And they give the reasons that I just mentioned just now. So that was a bit of a summary. What about the bulls? Who are the people who feel that from this point on, the price of gold is actually going to head up? And if you look at it, right, there's actually more reasons to support the fact that gold prices will now be on an upward trend from today's prices. Okay? There's about 5 to 6 reasons. Number one, there's huge economic uncertainties. The problems between Ukraine and Russia. The problems between Greece. Are they going to exit? Will it collapse the entire euro? No one really knows. Okay? Number two, the price of oil. All right? Number three, geopolitics, which I mentioned about Ukraine and Russia, which is why Russia is buying gold. Physical demand. If you track the demand of gold, all right, in countries like India and China, India, as I mentioned, is the world's biggest buyer. Last year, they consumed, I think, about 700 metric tons, all right, which is a lot for India. And for what purpose, friends? For jewelry. You know, in India, when they get married, they give a lot of gold, right? I can't remember whether they give or they buy, but there's a lot of gold. Whether the lady gives to the guy or the guy gives to the lady, the bottom line is gold is transacted during marriages in India. Till today, okay? Physical demand, whether it's from jewelry or technology, this is what happens. Interest rate, central banks. Central banks, for me, is the biggest clue. You can never go wrong when you follow a central bank. 2 months ago, friends, I don't know how many of you were there to witness the monumental move by the Swiss National Bank when they removed the floor of 1.2 to the euro, and literally the Swiss franc price shot up 38% in one day. Okay? So when central banks make a move, it's a huge clue to you and I as retail investors on what to do. As Russia crisis intensifies, gold gets its groove back. All right, this is on Forbes magazine. This is about hedge funds. So if you track what happened to central banks, and now you track what are the hedge funds doing, and these are some of the biggest hedge funds in the world. All right, they are betting most on gold in 2 years. In the last 2 years, there are more hedge funds moving into gold today. All right. This is to tell you the price of spot gold, meaning to say it's run up, and now it has corrected. Why has it corrected? I'll share with you a couple of reasons. Number one, falling demand. Number two, people who bought here, when prices go up and they take profit, meaning when they buy low, sell high, when you sell high here, prices drop, correct? When prices drop, does it represent a buying opportunity? Yes, because the people who have sold here, when there are more sell orders here, prices drop. It doesn't mean that it will continue falling, friends. This is the key thing that most people miss. One of the key reasons for this retracement is because people who bought here are taking profit over here. Buy low, sell high, prices fall. All right? That's called a retracement, which will represent another upward move. Last few reasons. Why even buy gold? What's the main reasons? If today you're looking for a reason, why do you need to buy gold? It is the only money that has never failed in the last 5,000 years of humanity. The only one. Number two, there is only enough investment-grade gold for everyone on earth to just have 1/3 of an ounce. Okay? Which means today, when you guys make some purchases, you are higher than the global average. Nice place to be. Okay? Gold is physical, it is portable, it is transferable. Like it or not, many Asians, that includes me and you, we like things that are physical. Okay? Things that you can see, smell, and touch. These are really tangible reasons why people buy gold. I'm helping you to understand some of the buying patterns, all right, of people who buy gold. I like this slide, that's why I put it in, all right, before I wrap it up. A statement made by Mr. Charles Jeans. Charles Jeans is the CEO of Gold Corp, the largest mining company in the world. You know what he says? He says, the end of this year, in 2015, we will experience peak gold. What is the definition of peak gold? You can actually check this out on Wikipedia. Peak gold represents the highest level of gold production, all right, before production starts to fall. That's called peak gold. Now, something you already know. So if production starts to fall, it simply means that there is less supply, correct? So when there's lesser supplies, you make your conclusion as to whether gold will go up or go down. Some people still may not understand, all right, that, when supplies fall means gold prices should drop. No, it's quite the opposite, okay? Because when supplies fall, demand goes up, right? Even if demand is the same, if you think about it, right? The same number of people are fighting for lesser amounts of gold, it can only push prices up in terms of market forces. Key slide for you to take a snapshot today. Feel free to snap your cameras. Okay? Why has gold found a strong support level at 1,001? 1,001 meaning to say today is about 1,150, right? Which is very near that 1,001. And I'll read out the answer to you. Drop the price of gold below that, and suddenly 90% of the entire industry becomes unprofitable. I mentioned to you there's an entire ecosystem that supports, all right, the extraction, the production, the mining, the selling of gold. Any price below that, there's many industries that's going to shut down. Okay? So, is it a good opportunity? The answer is yes. We are at that level today, right? How are you going to read it? And more importantly, how are you going to take advantage of it? This is also on one of the top news sites. Gold prices under 1,002 is an investment opportunity for gold bulls. This is a recent article, and today prices are at 1,160. Last 3 slides and I'm done. A little bit about silver for those of you who are interested about silver, okay? Because bullion represents gold and silver. China's supplies of silver are drying up. China is consuming huge amounts of silver, a lot for their manufacturing needs and industrial needs, okay? Finishing. And that means what? Well, if silver is scarce, there's a high chance that prices are going to go up from here. The time bomb, this chart is basically for those people who are very technical. This chart basically is telling you, right, that there's many people in the world who are shorting or selling the prices of physical silver. When you sell, at some point you got to buy it back. They have done a calculation to say, right, when they cover their sell positions, there is going to be a flurry of people who need to buy silver because they cannot cover their short positions in time. It's a bit of an investment analysis. This simply means, right, that there is going to be now a huge uptick because people need to cover their short positions of physical silver. Silver's increasing usage and global silver supply could fall. Same theory as peak gold by the end of 2015. Silver is seen starting slow, then gaining speed towards the end of 2015. Why? Number one, China is importing. All right? China used to produce a lot, but because they are consuming more than they are producing, they're now looking at a lot of silver mines around the world. Okay? Peru being one of them. Peru has one of the highest amounts of silver in terms of their silver mines. Okay? Couple of reasons why people are buying silver, so that you understand the buying pattern. There is less investment-grade silver available, all right, for investors to buy than there is gold. Technically, there is a bigger scarcity for silver, investment-grade silver, as compared to gold. Second only to oil as the world's most useful commodity. Okay? Silver is used in a lot of industries for manufacturing, for film, all right? Thousands of industrial uses. The world has used up more silver than it has mined. Good buying opportunity? The answer is yes. Right? Snapshot from Bloomberg. Silver is poised